JP Morgan says 3/4 of the global carry trade has now been unwound. And that's a claim that simply does not pass the sniff test. Now, you may have heard by now that over the last few days, the yen carry trade has started to unwind, and that's led to mayhem in the stock market. And then on Tuesday morning, JP Morgan came out and said, don't worry, everybody, half of the carry trade has now been unwound. And then just this morning, they're saying we're 3/4 of the way there, as if to create the illusion that this risk is gradually and orderly working its way through the market. And that is just simply not what's happening. You can see it in the charts, and it's got me wondering, what the hell is going on over at JP Morgan? What's up, guys? I'm Nobody Special, and yesterday we got this one in Bloomberg. JP Morgan says 3/4 of global carry trades are now unwound. And this came just a day and a half after we got this article on Tuesday morning, where JP Morgan say that the carry trade unraveling was only half complete. So the pattern is pretty clear here. Monday morning, the market wakes up, everybody is panicking, the yen carry trade is coming unwound. Then on Tuesday morning, JP Morgan says we're halfway there. And then late last night, JP Morgan says, don't worry, 3/4 of the way there. And it's only reasonable to assume that in another day or two, this whole yen carry trade thing will be behind us, and I'm sure we can all look back on this and laugh. But that's simply not what's going on here. This note from JP Morgan is incredibly deceptive, if not just outright arbitrary random numbers being pulled out of thin air, because nobody really knows how big the yen carry trade even is, let alone be able to say how much of it has now been unwound. Take this article here in MarketWatch, for example. TS Lombard estimates the size of the yen carry trade at $1.1 trillion. And then let's contrast that with this article in Business Standard from over a year ago, where based on a report from Deutsche Bank, they're estimating the yen carry trade to be as big as $20 trillion. Now, this is an older article, but if anything, the yen carry trade has grown substantially since a year ago. Now, they're taking a very aggressive approach here. They're including things like Japanese government pension funds, which are holding assets from the United States and Europe, and they're saying that is technically a yen carry trade. And well, I guess that's true, because what is a pension? It's borrowed money, probably yen, that was rolled over into dollars, and then they bought Western assets with that money. So it's reasonable to assume that the yen carry trade could be as big as $20 trillion. But the point is here, you can see how crazy this variable is. People are estimating this thing is anywhere from a few $100 billion all the way up to $20 trillion in size. And since the world can't even agree on how big the yen carry trade even is, how can these analysts at JP Morgan possibly be able to tell us how far along we are in unwinding it? Now, for the sake of being conservative, let's take the lower estimate. Let's assume the yen carry trade is closer to what TS Lombard says. It's $1 trillion. And keep in mind, other estimates out there place that number as high as 20 times that. So at $1 trillion, the unwind of the yen carry trade, if it was really 50 or 75% complete, we should be able to see that in the chart of the Japanese yen. Now, to put that in perspective, let's look at what happened to the Japanese yen during some of the prior interventions of the Japanese finance ministry. Now, what you're looking at in this chart is USD JPY. This is the number of yen it takes to make $1. As this chart moves higher, that's the yen weakening, and as this chart moves lower, that's the yen strengthening. Now, back in April, the Japanese finance ministry spent $60 billion to try to prop up the yen. This was a currency intervention. You can see in the chart here, the yen was falling as the chart was moving higher. And so the Japanese finance ministry steps in and they dumped $60 billion on the open market and used it to buy yen. In fact, in just the day or two after this intervention, the yen strengthened by about 5%. Now, we had another intervention by the Japanese finance ministry just a few days ago, July 11th, right above my head here. And at this point, the Japanese finance ministry dumped about $40 billion in the open market and bought yen with it. And when that happened, the yen strengthened by about 3%. So $60 billion in April strengthens the yen 5%, $40 billion in July strengthens the yen by 3%. You can kind of get a little bit of an idea of how much of a move dumping US dollars into the yen market can create and how much yen strengthening can be expected. Now, it's worth pointing out that there's a ton of other variables to consider here. You have things like geopolitical risk, election risks, energy markets, the timing of the day. Was the market liquid or illiquid at the moment the intervention happened? All of these things could cause changes in the reaction of the charts here. And if you guys want to split those hairs, feel free to have that out in the comments down below, and I'll thank you for the engagement. But for now, let's just assume all else remains equal. We should at least be in the ballpark here. Now, here's that same USD JPY chart showing the strength of the yen relative to the dollar. Now, I've changed it to hourly candles, and I've zoomed in on just the last couple of days. All right, you can see all the way over there on Monday how the yen was strengthening like crazy, sending this chart into free fall as the carry trade was unwinding. Now, over the last few days, I went back and I put those Bloomberg headlines showing 50% and 75% completion, supposedly, of the unwind of the carry trade on there. And you can see what the yen has done. This chart is actually rising. You can see when they published a chart that showed we were 50% complete. That was Tuesday morning, and at that point, the yen was trading at about 145 to the dollar. Now, fast forward to last night when Bloomberg publishes the article saying we're 3/4 of the way there at 10 p.m. Eastern Time, and the yen was trading at 146 to the dollar. So over the course of the day and a half, when JP Morgan told us we went from 50% unwound in the yen carry trade to 75% unwound in the yen carry trade, the yen actually weakened against the dollar. Now, when the carry trade unwinds, people are selling dollars and using the proceeds to buy yen, and so the yen should be strengthening during this time. Recall that last chart that I showed you where the dumping of $60 billion sent the yen strengthening by 5% and the dumping of $40 billion strengthened it by 3%. Now, assuming we're using the lower TS Lombard estimate of $1 trillion being the size of the global carry trade, then over the course of this day and a half when we went from 50% complete to 75% complete, that would mean about $250 billion was converted back into yen in the Forex market. And well, if $60 billion sent the yen strengthening by 5% and $40 billion strengthened it by 3%, then surely $250 billion converting over to yen would have sent this chart plummeting like crazy. But that didn't happen. The yen actually weakened. According to this chart, the opposite of what JP Morgan is telling us is really happening. This chart looks like people are piling back into the yen carry trade. And if you look at this op-ed from Mohamed El-Erian yesterday in Bloomberg, it's saying the same thing. It really looks like traders are getting back into the yen carry trade, not unwinding it. And right here in the second paragraph, Mohamed El-Erian is pointing out, Bloomberg reported that hedge funds and other fast money accounts rushed to place new carry trades funded by the Japanese currency, and the yen plummeted, dropping by 2%. So he's saying the obvious here, exactly what that chart of the Japanese yen just showed us, that people are getting back into the yen carry trade, not unwinding it in massive amounts like JP Morgan is claiming. So what is JP Morgan trying to do here? Are they trying to mislead people so they pile back into the market and buy risk assets to act as exit liquidity from big trading houses that are caught off sides and, I don't know, maybe minimize their counterparty risk? Also, note some of the language JP Morgan actually used in their original article. They're not actually saying the yen carry trade here. They're talking about the global carry trade. They're using phrases like global carry basket that didn't even exist in the financial press until yesterday afternoon. So what is JP Morgan really up to here? Honestly, I couldn't tell you. They're using some very fuzzy terms like global carry trade to suggest that the yen carry trade is almost done unwinding when that is clearly not the case. They're telling us it was half complete on Tuesday, 3/4 complete on Wednesday night, so we should be done by Friday, right? No, we're not even beginning to be done with the yen carry trade unwind. As a matter of fact, since Monday morning, it really looks like traders are piling back into the yen carry trade, and thus that unwind risk is actually growing from where we were Monday morning. But nobody is calling JP Morgan out on this. You'd think if we had a free and independent financial press, they would be holding their feet to the fire saying, hey, what are you guys talking about here? If the carry trade was really unwinding, wouldn't we be seeing the yen strengthen instead of weaken? We're not. The press isn't even asking that question because everybody seems so dead set on just cheerleading these markets higher, downplaying the risks that are out there, Don't worry, buy risky assets, provide exit liquidity so the big guys can get out, and good luck to you. That seems to be the message from JP Morgan. I don't know why they're doing it. I don't know what math they're using to support it, but the suggestion that the yen carry trade is almost unwound is just simply not true. If anything, the yen carry trade has been getting bigger for these last 3 days, not smaller. Till next time, live small and dream big.